Hey, well, hello everyone. My name is Matt Lokan and I'm your insurance agent. So I've been representing the organization, the coalition, for many years on the directors and officers side. And now I'm also going to represent your other liabilities and property coverages as well. So with that, I'm just wanting to jump in and introduce myself and talk everybody through the insurance portfolio. And we're going to be talking about the things that you're insured for, but just as importantly, the things that you're not insured for. So I don't want there to be any inappropriate thoughts that we're insured for something here when you're going without coverage. That's when we want to be talking and making sure we're erring on the side of caution as opposed to making assumptions. And that'll take us into a graphic here. And this is meant to really illustrate that when you're getting into the social human service world of insurance, like the coalition, there's just a lot more exposures than your standard retail store or restaurant might run into. So this represents many of the more common exposures that have an insurance product for those. So let's go ahead and go past this, and it's going to take us into the agenda. And so first thing there is you'll see you've got my contact information, and definitely feel free to reach out and let me know if you have any questions, just general concerns that you might have. Well, what if this happened? What would that do? What's the insurance response? Happy to have conversations like that. I do it all the time. No silly questions. And also just letting you know that this is what I do. Is Bliss Sequoia was founded in 2006, and it was founded actually to specialize in the social human service world. So I've been with the company since 6 months after inception and have been doing it ever since and love what I do. I get to work with good people that are trying to do good things for their community. So I appreciate everybody that's sitting on the board now trying to help out your individual neighborhoods and areas to be better places. So next is a disclaimer. So I am not an attorney, so please don't misconstrue. We're going to be talking about insurance concepts, and that's it. This is not legal advice. So there's my disclaimer. You've heard it. But at the same time, there can be a little bit of a gray area in there, and I'll always give you that disclaimer that this is what I see the attorneys are doing in today's world and kind of give you some trending ideas, but it's never going to be legal advice. So the next couple paragraphs here, again, you're going to have this information at your fingertips if you don't already, so I'm not going to read it verbatim. But what you're looking at there is actually aggregated information that we've been collecting over the last several years to explain the insurance market that we're currently in. And it's unfortunately not good news on this. Everybody knows that your home and auto insurance rates have been going up. Your business rates are going up. And absolutely in the social human service world, we're seeing things like abuse, molestation, professional liability, a lot of these other coverages where the rates are going up as well. This gives you all of the factors that are coming into play simultaneously. And of course, there's factors that we haven't seen come together and collide at the same time. And it puts us into what's called a hard market. And there's a soft market, neutral market, and a hard market. We're in the one we don't want to be in. But that red font right there is letting you know that just this last summer, the insurance commissioner for Oregon spoke at a big conference. And his prediction at that time, which was pre-tariffs, is that we're probably in this for at least another 2 or 3 years. And now that the tariffs are here, of course, we've got some movement to reverse the tariffs, but we still don't know what the outcome is going to be on those things. But this is a good read. It applies to pretty much all of the insurance products out there on the property and liability side. So I definitely recommend you take a look at that. So now we're taking a look at some of the insurance concepts. And I'm not, again, going to read this all the way verbatim, but I'm going to go ahead and basically, like I say at the top there, we're going to scuba dive. We're not going to snorkel into these things. So first is without insurance, a very basic concept to keep in mind is that it would essentially be the assets of the organization to pay for the damages to the other party, whether it's physical damage or bodily injury. And also it would come into play for the it also pays for legal defense costs. So it's not uncommon that you'll get a member of the public or a third party that really is not affiliated with you that brings a frivolous lawsuit. And with insurance, it covers not just substantiated lawsuits, but oftentimes frivolous lawsuits, as long as the insurance company has the responsibility to defend you for that type of an allegation. So there's a lot of benefit that you may not be thinking about, but that's where, of course, we come into play as your insurance broker. we don't work for the insurance company. We actually work for you as your representative. And so if you have something that's bubbling up and, oh my gosh, this might have some kind of an insurance response, that's where, of course, you're going to get in touch with the folks here at the coalition. They'll get in touch with me, and we'll have some claims counseling along the way to see what's going on, and if at what point we need to notify the insurance company, and at what point we need to turn in a claim. So there's multifaceted things, and of course, there's no specific yes, that's covered, no, that's not covered. We have to go through discovery and take a look at certain circumstances for each occasion. So next is the insurance company selection. And the point here on this one is that buyer beware. So if you're getting a really good price or coverages are different between insurance companies, you do need to pay attention to the P's and the Q's, dot the I's, cross the T's, because every insurance policy is not equal. And so making sure that you're getting the quality that you're paying for is essential. You'd be surprised how many times I've seen a policy that has been issued, not by me, but issued, and it excludes the very thing that they're trying to cover. And so it was very cheap for a good reason. So food for thought there. And then when you get into, insurance representation, picking your agent and agency, think of it like selecting your doctor. You want to make sure that you've got the right doctor that's going to help you with whatever health ailment you have. And so you're working with somebody and an agency that actually works in this field by design. It's not a sideline to what we do. It's what we do every day. Then as far as the liability coverage goes, just basic fundamental concepts here that we're talking about, so you'll understand as we go through this presentation what these things mean. So the first one is when we're talking about liability, you're going to see the word come up, aggregate, on a regular basis. And we're going to be talking about $1 million increments of coverage. That's typically how you buy liability policies in today's world. 1 million, 2 million, 3 million, so on and so forth. And the aggregate, think of it like a insurance bank account that you're given each year the policy renews. So if you had a 2 million aggregate, you would have a $2 million bank account that you could typically pull $1 million out at a time or per occurrence at a time. So we want to have a bigger aggregate than we do a per occurrence to make sure if you have a claim in one policy year that you're not tapping out your bank account. You still have something in reserve just in case there's another claim or two that are going to be coming to haunt you the rest of that policy year. Then at the end of the policy year, we go ahead and renew terms and we replenish that bank account for you. And so we negotiate, trying to keep rates down, but keep the same quality coverage and keep you going moving forward. So that's how those limits work for you. And like I mentioned already, legal defense is part of the policies in most cases. It's not 100% of the time, but I'd say 99% of the time it'll come with legal defense to represent you. And again, I've already talked about, of course, the benefit of that. But one of the things too, if you haven't been through an insurance claim on the liability side, I always joke that at the end of the settlement, you're going to want to take a shower because it's kind of a dirty process. The insurance companies are always going to rush to settle, and you may not want them to, but they're looking at a spreadsheet based on case law and settlements over the years, and they don't want to go to court. They don't want to pay for the legal defense. They don't want to have a sympathetic jury that can really spike the awards and settlements. So they'll rush to settle. And the idea is that if both parties are really not happy with the settlement, that's considered a successful negotiation. So it's kind of like legalized extortion sometimes. So I say that with a sideways grin, but there's truth behind every joke. So anyways, then the next one is as you're thinking about bringing on maybe service providers to put on an activity for you. One of the things we always want to make sure is that there's a contract in place. And so the idea is that you're going to go ahead and talk with your vendors. It could be food, entertainment, whatever it might be, and just make sure that everybody agrees in writing to what those terms are going to be to transfer liability, transfer risk. So if you hire somebody to come in and do a service for you, we want to make sure that they're going to protect you as the coalition, as the neighborhood for the work that they're doing. And that way you're going to have hold harmless indemnification, waiver of subrogation, these things that we're going to talk about a little bit later built into the contract. And if possible, something that's called additional insured, which is real standard in today's world. So these are all best practices, and I'm sure some of you haven't heard about them before, but this is all really very normal legalese in the insurance world. So then, of course, the last one there for the just the general considerations here is cost and exposure. So I'm a huge believer of anytime you can transferring risk. I'd rather you not take the risk and utilize maybe say Parks and Rec. So if you're going to go in and you're going to partner with Parks and Rec and do a project in your local park or school, so schools could be part of this as well, I should say, as an easy example. It's always best if you can actually be represented as volunteers for them and not your own volunteers helping with their project. There's a distinction there. If you're a volunteer for them, they're responsible for the liability and if you get hurt on the project, they're a volunteer at that point. That is best in class because if we can keep your insurance out of the loop, all the better. And that's going to keep your costs down. That's going to keep your claim activity, your loss ratio down, which in the big picture of things is hugely advantageous. So transferring risk is, you're always going to hear me say, yes, please do that anytime you can. Okay, so now we're going to get into the insurance portfolio design. And once again, I'm going to go quickly through this because everybody does have a copy of, or will have a copy of this. So there's definitions and it gives you all the info at your fingertips. So first, we're going to talk about your Philadelphia policy. So Philadelphia is the #1 insurance company and has been since the social human service insurance market was created. Philadelphia created it. And with that distinction, they just continue to be the front runner and blazing trails for everybody else to follow along. And so you're in very good hands. Anytime you're looking at a insurance policy, one of the things you want to make sure of is that the insurance company is big enough and financially strong enough to actually pay for the claims that you may experience down the road. And there's a resource that's free online. It's called AM Best. So capital A, capital M, Best. And you can look up any insurance company that's filed. So you could take a look at Philadelphia as an example. You'll see that they're an A++, and the way they rate them is just like a school grade. So if you're an A, you're doing fantastic. If you're an A++, that's top of the line. That's as high as it goes. So they are owned by Tokio Marine, one of the largest insurance companies in the world, and they specialize. So you're in the perfect spot for your coverage. I definitely recommend staying there as long as you possibly can. So there is a little bit of property coverage, and that's right here in the office. So we're covering all the furniture, computers, desks, chairs, you name it. It also includes an element of business income loss. So oftentimes, whether we're talking in the nonprofit space or the for-profit space, one of the #1 reasons that a company or organization will actually go out of business is because of business income loss as a result of a property claim. So if this building tonight gets caught on fire and the fire department does their job and they put it out, but you've got, of course, water damage, smoke damage, and they're not going to let you back into the building because it's not safe, you're going to start incurring some extra expenses. So you want to keep offering services, stay up and running so it's as if the fire had not occurred. So you're going to probably be running another office space rather quickly and trying to get up and running. So thankfully in today's technology, a lot of the administrative work is going to be virtual like we're doing right now. So we'll be able to set up shop off-site, go rather quickly, but to provide another space like this, you're going to have to rent another office space out. Thankfully, the market's advantageous right now to be doing that. But it's still going to add cost while you're waiting for this one to be renovated and ready to go and move back in. So there's certain circumstances like that that can come into play. For what you do, it's not my biggest concern, but it is really important to have that in there because it's surprising how much those costs add up over time. Next coverage is crime coverage. So what we're looking at is not someone breaking in and stealing here from the office. That's covered under the property section. What we're talking about actually is employee and or volunteer theft of money and or materials. So with that, you've got a $50,000 limit that's built into the policy. So the idea of that limit is that someone's not going to just do a smash and grab, if you will, and take $50,000, run for the border. That doesn't really happen in the real world. That's left for the movies in Hollywood. What really happens is a person or a group of people, the insurance company calls it a syndicate, their technical term, but they're trying to get away with over a longer period of time, stealing a little bit at a time. And when it's a group of people, they're trying to back each other up with their lie, essentially, and their scam. So once something bubbles up to the surface and people are discovered that they have been stealing, then we go through that forensic process and we figure out, okay, well, how much have they been stealing over time? And then we aggregate that number into one claim and one deductible. So unfortunately, that's one of the hardest claims to deal with because when that happens, it tends to be one of the more trusted people or group of people in the organization. And there's actually something built into the policy that's called a prosecution clause. So that means that the insurance company says, well, if we're going to go ahead and pay on this claim, they really need to know what happened. And so they say that you have to go through the legal process, file a police report, let the police take it from there and prosecute. So that tells the insurance company this happened, so they'll cut a check and pay you back for what you lost. But at the same time, there's another reason for it, which makes perfect sense. They don't want that person or group of people popping up down the street and doing that same thing again without having a record. So they're trying to protect everybody else for what you experienced at the same time. So, okay. So on the next page there, the next insurance subjectivity is earthquake and flood. So right now you've got $50,000 worth of stuff that we're insuring here at the office. Down the road, if you get your own building, some brick and mortar, or if you have what's called a triple net lease where you're leasing the building and the landlord requires you to insure the building, it's not uncommon, especially in the Portland metro area, that they require that you carry earthquake and sometimes flood if you're in a flood zone. So for now, it's not really a concern, but down the road, if something triggers that, hey, there's an exposure there now, we'd be addressing that for you. Inland marine, one of the oldest terms in insurance, that's right next to ocean marine. So that would be where we cover stuff that you own. Think about contractors. They've got their big equipment, big John Deere and Cat equipment that's out on job sites. They insure that equipment on an inland marine policy because it doesn't really have a home base where it stays all the time. Usually it's out in the field. So doesn't really apply right now to what we're doing here. General liability, now we're talking about another coverage that you do have. So your aggregate or your bank account is $3 million. Your per current limit is 1 million. And think of this as a bodily injury and or property damage coverage that comes into play. And it also includes libel and slander. One thing that it doesn't include that I'm going to try and get added back in if it's possible, and this is an underwriting consideration, is that over the years, they've been excluding what's called products and completed operations. And so in essence, if you're doing a bake sale, they're saying we're not going to cover the product that you're putting out there. And that'd be too big of an exposure for the insurance company. So one of the things I'm going to try and do as the market goes from a hard market to a soft market is I'm going to try and negotiate that back in for coverage for you. So that'll be one of the things we're looking at.
What's that called again?
Products and completed operations.
Okay.
So yeah, the term that you'll often hear is you build a widget and you put it out in the world and the widget hurts somebody or something. That's products liability coverage. Okay, so now let's take a look at professional liability. And so that's built in there for you. So you've got a 2 million aggregate and a 1 million per occurrence. And this comes into play anytime you put yourself out to the general public as having a higher level of knowledge or expertise. So me as an insurance professional, I have a license, I have professional liability, but it can come into play in other ways as well. So maybe the coalition is giving some advice and the advice that they're giving is misconstrued, and here comes an allegation of wrongdoing based on that advice. That'd be another really general, kind of big picture idea of where that coverage can come into play. One of the things that we're seeing on a more regular basis now is when someone gets hurt, and we're talking general liability, bodily injury type of a claim, it's not uncommon now that we'll see the opposing attorney go ahead and throw in professional liability at the same time. And their argument in most of these circumstances is that that injury actually happened at your activity. That's your professional liability because you're the one putting on the activity. So that's how they're trying to tie in two different coverages, trying to get into more deep pockets is their goal. Or if one of them's excluded and the insurance company says, we're going to exclude that one, but we'll cover it over here. They're just throwing everything against the wall to see what'll stick and then keep the process going forward. So definitely important you have it. Employee benefits, abuse molestation. We don't have that one in place. That would be very, very difficult to insure. You have to run background checks on everybody who has exposure or is working with what's called a vulnerable population. So we'd be trying to insure essentially a major portion of Portland for abuse molestation, and I just don't know that's ever going to be possible. And if we could insure it, the dollar amount would be cost ineffective. So it just would be prohibitive to do that. The employee benefits errors and omissions coverage. That would be covering the staff here. So if there's a clerical error that has a negative impact on their benefits, whether health or retirement related, that's where that coverage will come into play. So it's one of those that if at some point it makes sense to include, staff grows, or you just think it's a good idea. Yeah.
So you have NA behind that, so that is not a covered benefit then?
Correct. Yeah. Yeah. So if you see, what Claire was saying is if you see NA next to the type of insurance coverage, I'm saying that it's not applicable as part of your insurance portfolio at this time. But that one would be available to add. And with Philadelphia, it's typically $300 per year for $1 million policy. So that one's pretty cost effective. But again, I understand that all of these add cost to the overall portfolio. So that's okay. So now let's talk about automobile. And this is actually by far the organization's biggest exposure. And what it's doing is it's not covering any vehicles that are owned by the organization. The coalition doesn't own any vehicles. But what we're doing is we're ensuring the liability for everybody who's driving on the clock as an employee or a volunteer. So as you can imagine, that's a pretty big number. And sometimes it's people you don't even know that are driving that are being like a gopher to go grab some materials and supplies for something that you're doing as a project. So it could be something as simple as running and grabbing donuts. So if they go from the job site or the project site to go pick up donuts and then they come back, that drive to and from the donut shop is on the clock for the organization. So the way it works, it's state statute. So the state of Oregon says, and this is true of all 50 states, that the liability first is going to be for the driver's insurance company. So let's say the driver, the volunteer or employee has State Farm, just throwing one out there, and they've got a $300,000 limit with State Farm. We're going to use that up first, and then the non-owned liability coverage is going to drop down after State Farm is done paying. So if it's a big accident and you put a few people in the hospital, $300,000 isn't going to go very far in today's world. So having that extra limit of coverage drop down is really important, protecting the driver, protecting the organization, protecting the board and management. So really, really important. And the cost of those claims just keeps going up. So again, really important to know that's there for you. Okay, so the next coverage is an umbrella. And an umbrella in today's world, it's just a tool that we use to buy higher limits of coverage. Doesn't broaden the coverage. What they typically call it in today's verbiage on the more technical verbiage for it is follow form or excess follow form coverage. And so with what you have now is a $2 million umbrella with a $2 million per occurrence limit. So the coverages that we went over above, they're 1 million per occurrence, and then we add another 2 million over and above that. So the simple arithmetic means that you have a $3 million limit for the coverages that are listed as part of the umbrella. So in the text here, you can see that the umbrella lays over general liability, professional liability, and auto as well. So that's all really important for you. Okay, well, let's jump into directors and officers. And so there's 3 parts to the coverage. So the first one is actually called directors and officers. And that's what's covering the board and management and the organization, primarily for decisions made or failed to be made from a financial perspective. So simple things like misappropriation of funds, that's where that coverage comes into play. Those are pretty rare. Those don't happen very often, but when they do, they tend to be pretty big ticket items. So there's relevance to it. We want to have that as part of the coverage, plus it's what we call the policy. But where the claims really come from is employment practices liability. And so that is things like wrongful termination, harassment, retaliation. And when we think of that, we tend to think about what's called first party employment practices, where you've got a manager that's harassing an employee, and here comes the employment practices claim based on those kinds of circumstances. But it also, in this policy, there's something that's called third-party employment practices, where you might have somebody that is a volunteer or an employee that's at an event and they discriminate, they make an inappropriate sexual advance at a member of the public or an attendee of the event. That triggers a third-party employment practices claim. So if somebody gets their feathers ruffled enough, it's one of those things where we can see those claims come forward. And so once again, it's going to be legal defense, awards and settlement if necessary. So really important to know that that's there, because that's where the lion's share, about 99% of the claims for this policy come from, is employment practices, first party and third party claims. So there's also a third component to the coverage that's called fiduciary. And if we were just talking in plain English and not in insurance speech, you'd think fiduciary is the directors and officers piece, but it's actually very specifically defined. It's covering the board and the organization for decisions made or failed to be made that could have a negative impact on employee benefits. So easy example, you switch from one healthcare plan this year to another healthcare plan next year. And that was a decision made by the board and management to do so. And what was covered on the prior plan is not covered or is covered at a much less amount, and or deductibles really high. And out of desperation, you get a lawsuit that decision was made. I had nothing to do with that. Out of financial desperation, here's my lawsuit. So those are not real common. When they do happen, we haven't seen anything that big, but we've had a couple that are hundreds of thousands of dollars. So it's good to see that that's there, just in case. You never know. That's automatically built into the policy. That's the policy itself, by the way, is through the Nonprofit Association of Oregon's Directors and Officers Program. And I'm the program administrator and agent. So we put it together in partnership with NAO, the Nonprofit Association of Oregon, and Great American all the way back during the recession. So it's been in place for a long time. It's your own policy. It's not part of a master policy. We're just leveraging the buying power of the group, and it's worked out really well. Keeps your costs down and adds coverages and things like that that aren't being charged for it. So on that policy, you've got a $2 million aggregate. The next bullet point there is accident medical. And like I mentioned earlier on, we are in the process of quoting that one. Liquor liability is the next coverage there. So that one is not included on the policy here. But if we're going to be having, like I mentioned, an event, and you're going to set up a beer garden, we can add the liquor liability to those special event forms. And one of the things I do want to mention is anytime we're talking about liquor liability, always get in touch with OLCC and find out what their requirements are. So sometimes you will be considered temporarily in the business of selling alcohol. So whether it's hard alcohol, wine, beer, whatever it might be, if you're actually exchanging some kind of remuneration money for the alcohol, whether it's a ticket and you get extra, you buy admission to the event, you get 2 beer tickets that go with it. That's likely going to be considered temporarily in the business of selling alcohol. So you'll have to get a temporary liquor license from OLCC, have to go through their training for proper monitoring and things like that. But that's always the thing to do, is just check in with them first and see what you need. And then we can talk about the liability side on the back end for you. Next coverage there is cyber liability. So as was mentioned earlier on, we're in the process of quoting that one as well. So theft of personally identifiable information is one that we always hear about on the news. We hear about someone actually getting into your system, holding you for hostage, and then negotiating, get the ransom on the back end. That'll be covered. Cyber vandalism, someone's just making havoc of your systems, those kinds of things, business income loss. There's going to be a lot to that coverage as we're going through the quoting process. Workers' compensation is included, so we're safe on that one. And that's statutorily required. There's no choice on that. And we're lucky to have SAFE. They're a quasi nonprofit insurance company themselves. So they actually have a board, they have a mission. And so based on their mission, they are really by design the best place to go in the state of Oregon. So they own the lion's share of the marketplace because their quality of coverage, their services, and their rates are just so hard to compete with. So you're in the best place possible there. Unemployment. So if the organization got up to about $1 million in total payroll per year, we'd be talking about unemployment, because you can opt out of paying the state unemployment tax based on a bill that was passed in the 70s. So it's one of the best kept secrets in insurance. Since I specialize, I represent that as well. Doesn't apply here, but if anybody's curious about that for any other organizations, reach out to me. It's a big money saver. Pollution, we've not had that as part of the insurance portfolio over the years, but with what you do, you might have a little exposure out there based on certain events, but that's probably because you're bringing in vendors that are doing things that have pollution. Hopefully, it's not you. Think of a above ground fuel tank or something like that. That'd be a pollution exposure we want to ensure. And then the last one there is special event. And so that's the one where that's the spin-off for the bigger events, things that have a little bit more hair on them, like I mentioned. We go to specialty insurance companies that'll just underwrite it for that time period. So you're not buying a full year policy. We're just going to go ahead and cover the event from start to finish and make sure we've got you covered there. So on screen here is sample language of a hold harmless agreement. And so once again, this is one of those where you would want to take a look at this and just familiarize yourself with some of the terms. And this is where you would have a vendor come in, and let's say it's a food cart you're going to bring in, and you're going to say, okay, well, as a paid contractor or vendor, we're going to give you some language that you're going to provide these services between this date and this date. And we're going to require that you carry certain kinds of coverage. So you're going to want general liability, auto liability, workers' compensation based on state statute. All these things are actually written in here. And then depending on what they're doing for you, you might require professional liability, abuse molestation, cyber, liquor liability. And this is just, again, sample language that you can see that is using the proper verbiage to trigger those coverages and transfer the risk to them as a paid service. And then it's requiring that they hold you harmless, indemnify you, which means they're going to legally defend you if there's a lawsuit, because you likely get named in the lawsuit as an interested party, but you weren't the one doing the work, you hired them. So you want their insurance policy to pay for the legal defense and clear your name, and if necessary, pay awards and settlement on your behalf as well. So then your coverage would lay over the top of theirs potentially, depending on circumstances, things like that, if it's a covered peril under your policies. So this is really important language, just as best practice. And this language was drafted by an insurance company legal department. So this is really best in practice wording that we see from the insurance companies. So if we could scroll 2 more pages down, there's another document I want to show everybody. So this is actually right out of the insurance policy with Philadelphia. And so what this is doing is it's called a exclusion, and it's designated ongoing operations, which is just a fancy way of saying, if you're going to do these things, we're going to exclude them. They're not covered. They're not saying don't do them. They're just saying if you're going to do these activities specifically, that you actually need to get special event coverage for it. And it makes sense with what they're pointing at here. Classic car show is a really obvious one. There can be some pretty expensive, 4 sets of wheels rolling into some of those car shows. And Philadelphia doesn't want to have a thing to do with their liability for it. Imagine a wildfire coming through and burning all those cars, and Philadelphia has to pay for all of them, or at least be part of that equation. They don't want that. So they're saying the event, and oftentimes those are in parking lots and in grass fields where people can step in potholes, whether it's dirt or concrete. And they don't want to be responsible for that either, as people are gawking at the car, not looking at where they're walking. So each one of these events, you can, if you put your mind to it, you can see why the insurance company says, that's not really what we're here for. We want the more vanilla activities. And so these other things that have more meat on the bone, go get a special event policy. So I thought that'd be kind of helpful to see what over the years they've maintained on this exclusion here for you. So on the next page here of the packet, this is the catch-all. And once again, insurance is such a big topic. There's no way we could really touch on it all. But this is a good effort at trying to touch on a lot of the things that we experience in the Northwest that might have an insurance response to it. One of the things I want to mention, actually 2 of them. First is liquor liability. So in the state of Oregon, liquor liability is some of the strictest across the country. And so if you were to have maybe a block party and you're giving away beer and wine, maybe even spirits at the block party, you are creating a liquor liability, whether it's a direct liquor liability, you're temporarily in the business of selling, distributing liquor, or host liquor liability, you're not selling it, you're just giving it away. There's 2 different types of coverage there, two different types of liability, excuse me. So if you were to give one beer to an attendee, and then after being at the block party, they went to the local establishment, had a couple more beverages, went to another establishment, had a couple more beverages, next location. By the end of the night, they're definitely drinking and driving. They're still buzzing around town. You're going to be part of that lawsuit because you were the one who started that domino effect. So you're going to get pulled into the lawsuit. It's an unfair precedent that's been set in our state, but you were the one that got it going, even though they were not visibly intoxicated as they left, which used to be kind of the precedent. Now, the attorneys have actually made some case law that you're gonna go ahead and be paying as part of the damages, when they get into an accident and they're drinking and driving and get a Dewey and all those things. So once again, liquor liability is not something to be taken lightly, and if you can transfer the risk to a vendor that has liquor liability and they're gonna get paid to do that for you, that is always gonna be my recommendation. I'm never gonna be the one to recommend that you take on the liquor liability yourself. It's just become too great of a risk. So one of the other things that I wanted to bring up as well is drones. So drones, I'm sure, there's going to be different households and different communities that are using their drones. And what I'm saying is it's not a good idea to use those drones as part of your activities. If they're doing something at their home and it's part of their homeowner's liability and their family is doing it, it's not part of your function, that's okay. That's their risk. But once you pull in a drone, there's specific liabilities that come into play. And so just imagine a drone that malfunctions, falls out of the sky and hits a car. The windshield cracks and the driver can't see the pedestrian crossing the street, hits the pedestrian. That if that was in your program, that was part of one of your events, like maybe a drone race or something like that, which would be fun. But again, when I said it's fun, it's got risk. So, drone liability is a very separate and unique insurance policy that we don't carry. So that would be one of those where I would definitely say just steer clear of the drones. And if you want to have some drone entertainment, there are drone specialists out there that'll come, just like you see with the fireworks where it's all drones related and it's the light show with the drones. Using those types of outfits as opposed to having, your homeowners come out with their fancy little drones, because then you absorb the liability for that as the event organizer. So really a safety conscious culture is the best bet for everybody as you're putting on these events and saying, hey, let's keep everybody above reproach and let's keep everybody safe is really your best foot forward. Knowing that, hey, this is the real world. People are going to get hurt, mistakes will be made, and insurance is designed to respond not to intentional acts. So if somebody intentionally hurts somebody else, we're not likely going to cover that individual. We might still cover the organization, but that person is going to have to fend for themselves in a court of law. You'll still get protections for their actions, but it does cover, and once again, I say this with a sideways grin, but it does cover stupidity. So people make mistakes. We're all human. So if it's an accident and somebody or something gets hurt, that's an easy way to think of where insurance comes into play. We're actually getting that quoted. So that's going to be the cyber liability component. And that's actually being quoted as we're talking. Yeah, so typically, again, good question. So yes, youth are part of what would be considered a vulnerable population. The other two that are typical would be elderly and individuals with disabilities. So with this policy, I don't think that we'd be able to insure it on this Philadelphia policy because again, the breadth of coverage would be a major portion of the Portland area. Now, where we might be able to get coverage is on what's called a standalone policy that would ensure your piece of the pie. So depending on which one of the neighborhoods you're in, we'd write a standalone policy for you that would
Okay.
cover specifically for the abuse exposure that you have. This is going to actually filter down, if you will. So yeah, this does apply to everybody. And one of the important things there is that everybody needs to be on the same page when it comes to getting in touch with the folks here at the coalition and making sure that they are saying, yes, this would be covered, no, it wouldn't be covered. And sometimes they're gonna have a question mark in their head too, and they're gonna give me a call. And so at that point, I jump in and we're talking behind the scenes, and sometimes we'll need what's called a special event policy, or just recognize that maybe something you're doing really isn't insurable, and just making sure that everybody's aware of that. So if it's actually a official project and someone's acting in a volunteer capacity for the neighborhoods, it does apply. Good question again, and that's going to vary based on circumstance. So the insurance companies on the life and health side of things, they're pretty good about doing their discovery and finding out who's going to step in first and be primary to pay for the injuries or death if it were that bad. So first thing is you're going to have the medical field that's taking care of the injured party. And they're going to be asking questions, where were you and what were you doing when you got injured? So if it's a fun run, let's say as an easy example, and somebody steps off a curb as a volunteer and breaks their ankle in the middle of the night, and yes, I've covered many of those claims, they definitely happen. So we're going to go ahead and just make sure, let's get this person in for medical care. They need to get to the ER right away. And then we can always filter through the backside of it. So you'll have the initial medical professionals, if it's an ambulance ride, taking some reports. Then of course at the ER, they're gonna be taking reports. And then we're gonna go ahead and just turn it in, most likely to that individual's insurance at first, just to keep the process moving forward. Then that insurance company may say, okay, where were you? What were you doing? And then it goes back to the organization here, the coalition. We're gonna see if there's coverage that might be triggered here, turn it in, see if they're gonna cover it. So there's a bit of a process to it, and the insurance companies are going to dictate exactly on what happened, on who's going to be the one to first pay on that. And usually it comes back to the accident medical coverage if that's in place. Yeah. So right now, especially in a hard market, any claim is going to have an impact on renewal rates. So in the accident medical world, having a couple claims here or there tends to be pretty subtle. It doesn't do a whole lot. But if it's a couple really big claims that go for, I'm just making this up because the coverage isn't in place right now, but we are looking into it. But if you had $100,000 accident medical coverage that covers volunteers participating in a program, and they're acting within the definition of that program as a volunteer, that should trigger the accident policy to go ahead and pay for that. So if you had a couple $100,000 claims that use the full limit up a couple times over the year, that would have an impact on the rates the following year, most likely. And another consideration too is sometimes people get hurt when they're doing this. And they go ahead and utilize the accident medical coverage. Again, if we implement it, this is how it would come to fruition. We could still trigger the accident medical coverage, and it wouldn't jeopardize any response from Philadelphia's general liability bodily injury. So if somebody still went to an attorney and decided, hey, I'm going to file a lawsuit, we could still trigger the coverage for Philadelphia, even though the accident medical already paid on the medical side there for you. So that's a big benefit to keep in mind. It'd be a far stretch, and again, not legal advice. But I get these questions all the time.
Okay.
So I actually recommend Lyft as much as possible. Lyft, Uber, cabs, whatever it might be. That's another example of transferring risk. So if you can do that, their insurance is primary, and it would be really a strange circumstance to pull in the coalition's coverage to lay over the top of Lyft or Uber, because you're paying for their professional service. So
Okay,
they should be wholly responsible for it,
okay,
including you getting injured in their car. You should be covered for some of that as well.
okay, thanks.
Yeah. So not during the parade. The parade's not actually covered with Philadelphia. So that would have to be a separate policy, a special event policy to cover parades. And that's very normal. About 15 years ago, you could cover very small parades on the Philadelphias of the world policies. And since then, they've had too many things happen during the parade where a car just had a hiccup and leaped forward and hit somebody in the parade, or people on the sidewalks, they're just spectators. That's a really easy example. So we would be going to the special event coverage for that.
Okay,
And there's plenty of markets that cover those kinds of things, insurance companies. But if somebody is not in the parade, but is outside of the parade and being a gopher, that's where we could have some of that ancillary coverage. And again, it's gonna be very specific to the circumstance, but that could trigger the coverage here under the auto, just not the parade function itself. Oh, 100%. Yes. Yeah, as a matter of fact, we're gonna be touching on that. To that point, I'll just go ahead and kind of go down that rabbit hole just a little bit. Um, there right now some legislation going on at the Capitol, and they're trying to help the ski resorts out because the waivers they're using just aren't worth anything, and they're basically getting sued out of business. So they're trying to make the waivers have more of a legal standing, more of a legal backbone, so that they can stay in business. And right now, you might have heard about it on the news, but this year there's one standing insurance company left in the state of Oregon. There used to be three that were kind of the go-tos in Oregon. The other two have already left because they just can't make any money here. And so they got sued out of offering coverage and being in business in our state. So next year, unless something changes, the final insurance company is going to leave the state as well. So they're trying to make our waivers stronger from a legal perspective so that we can get volunteers out and about and help our adventure companies that are out there like ski resorts. So still, even with that being said, that they're pretty weak from a legal standpoint, it's still best practice, and it's actually still required by every insurance company like the Philadelphias of the world that you're using those waivers. And so it's basically trying to weed out the insincere is how I put it. And so some people, they just couldn't look in the mirror and bring a lawsuit if they knew they actually signed that waiver that, hey, I'll take responsibility for myself, and this could potentially be a dangerous activity, doing a cleanup project, something like that. If I get hurt, it's on me. But there's other people out there, they see dollar signs. And so they think it's a way to make a quick buck, and there's plenty of attorneys out there that see the same opportunity. But still, please do use them. Okay, so let's kind of go back to the concept of how we're insuring the individual neighborhoods through the coalition. So think of each neighborhood essentially as a subcommittee of the coalition. So that creates a layer of control from the coalition on down to each one of the neighborhoods. And so we want to have people from the neighborhoods represented here at the board level, and that creates an insurable interest and proper oversight across the board. So that way you're going to be protected by the policy for the exposures that we're insuring. So to your point, you have $6,000 in the bank account, but if someone said that they tripped over I don't know, a bag of garbage on the sidewalk, and they caught themselves, but they broke their wrist on the way down, that would be a really easy example of something that we'd say, okay, let's take a look at this, turn it into Philadelphia. Let's see if it's a claim. Sometimes it's fraudulent. They broke their hand somewhere else and they just faked a trip. It happens all the time. So Philadelphia is going to do their due diligence and look into it. And with cameras and things like that, thankfully, it's gotten easier to realize when someone's faking. But if it's really something that happened, substantiated, they're going to go ahead and pay for those medical bills and hopefully take care of it from there. But it would also pay potentially, pain and suffering award and settlement on the back end over and above just the medical bills. If that person was litigious, it's possible. So, yeah, my example was a member of the public walking by and tripping over that.
Oh,
So if someone that's a volunteer were to trip and fall, we would hope that their personal insurance would step up and pay for it. That's the goal, especially with having those waivers signed. And one of the things that we're in some ways fortunate for is we have the Oregon Health Plan. So it's not real common that even kids are going without insurance in today's world. So usually there's a health insurance response for volunteering when there's no negligence on your part. Someone just tripped over their own shoelace. But again, it's really case by case basis. And if there's negligence on the organization's part, it's possible to have a claim come back onto the organization. I even have had multiple claims where a board member sues the organization. So I think ice storms, things like that, and they slip and fall on the way to a board meeting. I've actually had a couple of those kinds of claims, but they're truly rare. Most people don't go that route. Question, the insurance companies are, there's going to be language in both policies called other insurance clause. And so it's going to come back down to something in writing to help guide them. Otherwise, it's not uncommon that the insurance companies are going to literally point at each other to be the first ones to respond. But it's a good problem to have if you have two policies in place. Yeah. So that's actually more complicated than you think. So you've got multiple interested parties. So there is no black and white answer. There's no right or wrong answer. It's going to play out as it plays out if something happens. And I don't mean to be completely cryptic, but it's amazing how these things can take a turn unforeseen based on something in writing, something that you don't know is out there, like an MOU in the past. The different ordinances and laws can come into play. Who's responsible for the street during that time period? Did you have a permit? Did you not have a permit? So I can't really say exactly how it would work out. But really the best thing to do is actually get in touch with the coalition folks, say, here's the event that we're looking at doing. And once again, if it's something they don't know, they're going to be in touch with me to make sure that you know if and how that's going to be covered. And again, when we get into the streets and we're talking about shutting down, getting permits, those types of circumstances really should be ran by us and the folks here at the coalition. And so some of those activities may be covered under the Philadelphia policy. Some of them may not. It depends on the exposure, depends on what you're doing while you're closing down the street. So if you're closing down the street and you're putting on a festival, regardless the size, you have a beer garden and some other fun things, and those types of circumstances typically are not going to be covered under the Philadelphia policy. And we don't want to cover those necessarily under the Philadelphia policy because the risk is too great. So the Philadelphia policy is incredibly cost competitive because we're trying to protect it at the same time. So we don't want to cover the things that have more hair on them, if you will, for risk. So when we place a special event policy, that's protecting the loss ratio of the Philadelphia policy. So if we have a claim on the special event form over here, someone trips and falls in a pothole like you're mentioning, and it's at one of the festivals, we're going to go to the special event policy and pay for that, not to Philadelphia. So that doesn't show up on your claim history report with Philadelphia come next year's renewal negotiations. Yeah, so we run into that an awful lot as far as effective dates and getting certificates of insurance, especially for the cities and counties. They're pretty militant about it. So for a parade, we would likely be writing a special event policy for you. So we can write that up about a month in advance, get it done, get that certificate over to the city and make sure you're all squared away. So usually the insurance companies don't want to underwrite it too far in advance because the rates and the things might change in the marketplace. So about a month in advance is where they. Yeah, and the special event policies tend to be a lot easier to underwrite right now. There's a lot of insurance companies out there creating demand. And it's becoming much faster to push those things through.
Yeah.
There might be some Q&A. Okay, well, you're doing this. Tell me how you're protecting people in a dunk tank, those kinds of things. Most of the time most of the time now when I see dunk tanks, it's actually a vendor that's coming in that's going to give you that hold harmless language that we were talking about. So if you were doing it yourself, I'd be talking with Philadelphia and seeing if we can just add it to the policy, but they'll have questions. But if you can transfer the risk and just bring in a vendor that has their insurance and will protect you for it, that's once again, that transfer of risk is priceless. Yeah, so I'm thankful to say we haven't had a scenario where we've had to worry about that just yet. But in theory, the policy is going to drop down and protect everybody as well. So you're considered to be on a subcommittee to the main board, but you're a sub board to the main board. So that should trickle down and cover you as well. Yeah, so like we are getting better at knowing is never say you're sorry, never saying, oh, that was my fault. You know, which is really common when somebody gets hurt. You want to make them feel better about it. But anything we can do to avoid language that might steer it back at you, the organization, the neighborhood of being at fault is best practice. So the less you say, the better. But at the same time, coming in and saying, are you okay? What do we need to do? Try and get them to help. That is that gap that we want to fill and make sure we're taking care of them as good Samaritans and due diligence side of things, but not crossing the line and saying that was our fault is essential. Yeah, I think it's great you bring it up just for everybody's understanding that that is exactly how to respond is very, very bland. You want to come into it with a real soft touch and make sure you're not putting yourself in a bad legal light and setting precedent right out of the gates that you're at fault. I do periodically, yeah, and I'm happy to do so. Um, it's rare in today's world that I see those waivers ask for something that's not legally transferable. But every now and again, I see a really old example that will use terms like any and all. And that's just not possible. So again, that's one of the reasons that waivers are flawed is you can't waive everything. If the other party has negligence that leads to your injury, yeah, and again, this is not legal advice, but that shouldn't be transferable, and I wouldn't expect it to be. And as a matter of fact, we at Bliss Sequoia have a library of waivers as well. So it could be something like a photograph waiver. So if you're going to be holding an event and you want to take pictures that you're going to use for marketing purposes, always best practice to actually have somebody sign the waiver that you're going to use their likeness in your marketing. So if odd things like that pop up, just channel it through the coalition here, and they'll get in touch with me, and we'll tap into that library for you and provide you the information. Nice thing too is most of our waivers are in Word format, so you don't have to retype out a PDF or an image of a document. You can actually just take the document, put your letterhead on it, and you're all set to go. Again, I'm sorry if it's a legal question. I know it's hard to, draw that line between the two, but best practice, probably not a problem. It's very rare that I've read about claims and lawsuits that based on those circumstances have risen to that level. But if you took a picture of somebody and they just were absent-minded, that might actually cause them personal harm. It could be somebody who is trying to steer clear of a family member, and suddenly that family member is able to find them through that picture. That can cause harm, that causes liability. But if they sign the paperwork and it leads to that, they've knowingly signed the paperwork. So it's those kinds of circumstances that can be hard to predict.
Okay,
Yeah.
yeah,
So using those waivers is always recommended. Anything in writing is always best. And the reason for that, and this might stick with everybody, try and get it in writing while everybody is smiling.
mhm,
If you try and do it after something's happened, it's going to be a bumpy ride. Fireworks, inflatable, bouncy houses for kids, trampolines, anything water related right now. Insurance companies are terrified of water. So whether we're talking about a pool or if we're talking about open water, so even if it's a lake or a stream, if it's open water, the insurance companies are very hands off. They're terrified of it. And simply put, they've been pulled into some massive lawsuits. Started really in the water parks arena. There was a big claim that went for it. The original allegation was $100 million and it settled for less than that. but it's still settled for well over 50 million. And so that's just one example. So anything water related is not something to take lightly. And anything water related is likely not going to be covered with Philadelphia. Pretty much anytime you think something sounds fun, the insurance company's probably not going to like the idea of it. So anything that is adrenaline rush, those kinds of things, that's where we need to be talking and saying, okay, is this covered by Philadelphia or are we talking special event? Because that's kind of an easy way conceptually to think, okay, this might be something we need to run by the coalition and Matt and see what the insurance response is. Oh, okay, that's a good description there. So now if you're talking about just misters for a nice hot day, we're probably gonna have another really nice hot summer. That's not the concern. It's if someone could drown in it. So think about that distinction. And in today's world, the insurance companies are even scared about like little kids pools. And and we've all heard about this, but kids can drown in less than an inch of water. So even those are of concern. Misters are fine. Yeah. Handing out a bottle of water is fine.
Unless it's frozen.
Right, there you go.
Sorry.
Aerial projectile, yeah. Mhm. Well, if you're allowing it, there might be vicarious liability.
What if you don't know and all of a sudden it just goes over and you don't, I mean, half the time you can't see who's running it.
Yeah, right, that's a good point. So on that one, it's gonna come down to what are the circumstances, who got hurt, who's operating it? Can you find the person that was operating it? But there's something in the legal world, the liability side of things, and it's vicarious liability. So it's not saying that you directly caused the harm that's creating that liability, that damage to somebody or something else, but that you created the opportunity for it to happen. It's called vicarious.
Mhm.
So it's your big block party, your big event, the night out. And so if something happened there, you're likely going to get named in the lawsuit. So it's not a bad idea that as the event planners are starting to kind of take a look at different aspects to the event, is bounce it off of us. Say, we're looking at doing this, we're looking at doing that. And that way we can give a little bit of feedback. Because at some points I might say, that's really not a good idea. I think there's just way too much risk, even if you hire out a vendor. But I would say most of the time I'd say it's probably, hey, we just had an event. Let's get the committee back together and let's talk about successes and failures. And so it'd be way too soon to get in touch with me at that point. But once you kind of figure out which events you really are thinking you're going to do, maybe 6 months, 3 months in advance, and then you're really getting the wheels spinning, bouncing that stuff off me just to talk through the insurance risk side of things would make good sense. And that way I can give you some feedback on what the insurance process is likely going to be for you. As far as quoting is concerned, I like to start quoting anywhere between 3 to 2 months in advance, depending on what we're quoting for. So special event policies, to Claire's point, is oftentimes the city is asking for those certificate of insurance months in advance or a month in advance. And the sooner they can get it, the better. So with that in mind, probably a good month of underwriting time for the special event policy. So that put us 2 months before the event would make good sense. That'd be right in that sweet spot. Yes. Yeah, and that's a really good point. So on a special event policy, you can actually capture the event exposures and the time period for multiple events under one policy. One of the tricks there is that that can be prohibitive sometimes if that's going to be a floating date. Because some of the insurance companies say, once that policy is put in place, we're not going to change it. So if an event gets canceled or gets moved because of weather, those kinds of things, that can actually create a problem. But sometimes it makes really good sense. So if it's indoor type activities, the weather is really not going to bear much weight. Well,
Okay.
I think what would be best is actually to put together just a standard template, just using a spreadsheet or a Word document, and ask the fundamental questions, the who, what, when, where, how, why kind of questions about each event. Then actually go through those so I can take a look at it, kind of think about the different events, have a conversation with you. That would be the best way to approach it.